Everyone thinks VA loan limits don't matter anymore since 2020, but if you already used your VA loan once, the 2026 limits could be the difference between a zero down payment and a massive down payment on your second VA loan. If you're a veteran planning to buy, upgrade, relocate, or use your VA loan again in 2026, the new VA loan limits just changed the math. And for many of you, it means thousands of dollars less required for a down payment, or even keeping your zero down payment advantage when you didn't think you could. In this video, I'm giving you the full breakdown of the new 2026 VA loan limits and how they compare to 2025, and exactly how they affect your buying power, especially if you already have a VA loan on the books. Welcome back to the channel. I'm Jason Wood, the VA loan guy, and let's clear up the biggest misconception right away. If you have full entitlement, VA loan limits do not cap how much you can borrow. They only matter when you already have a VA loan tied up in a home you still own. So today, we're going to break it down. We're going to show you what the new 2026 VA loan limits actually are, how entitlement math works, and how much home you can buy with zero down in 2026. I'll give you some examples for standard cost and high cost counties and how this affects your PCS moves, your investment strategies, and second home purchases. So let's get into the numbers. 2025 versus 2026 loan limits. The baseline county loan limit in 2025 was $806,500. In 2026 is $832,750. That's an increase of $26,250. Now let's talk about the high cost county maximum. In your higher cost counties, in 2026, that limit is $1,249,125 for one unit property. Why the increase? The FHFA adjusts conforming limits based on nationwide home price growth, which was roughly 3.26 last year. The VA uses the same limits. So the translation, more room, more entitlement available, more zero down purchasing power also. So how does entitlement work? Step one, find your 2026 county limit. The standard county limit is going to be $832,750. In the high cost counties, it's $1,249,125. Step two, the VA provides a 25% guarantee of this limit. So for example, 25% of $832,750 is $208,188 of total entitlement available. Step three, subtract entitlement tied to your existing VA loan. So let's say your first VA loan used $60,000 in VA entitlement. Step four, multiply what's left by 4. This equals your zero down limit. So your remaining entitlement, $208,188 minus $60,000, that's what you used on the other VA loan, equals $148,188. You multiply that by 4 and you come up with $592,750 of zero down payment buying power. This is how the VA determines whether your second home requires a down payment and how much. So in a standard county example, 2026 baseline limits are going to be $832,750. So the entitlement is $208,188. Let's give you a scenario. So if you bought a home in 2024 using a VA loan that used $60,000 of your entitlement, your remaining entitlement subtracted from the available entitlement in today's new limits would leave you with the $148,188 figure. That is your zero down entitlement number. And if you just multiply that by 4, you come up with the purchase price of $592,750. Now, let's say you wanted to buy a home that was $700,000. You would take that $700,000 and subtract it from $592,750 because that was the zero down amount, right? So you're left with $107,250 over the zero down threshold. The VA says, okay, at this point in the game, the VA guarantee of 25% has been exceeded. And we're okay as long as you qualify buying a more expensive home. But we as the VA are going to stop our guarantee right here. And everything over that, you now have to self-guarantee. So the VA requires a 25% coverage of that difference. So our difference was between $700,000 and our zero down loan amount. The difference is $107,250 times 0.25 or 25% equals $26,812 down payment needed for that particular purchase. Because of the 2026 increase, this down payment requirement may be significantly smaller than buying in 2025. So let's go through a high cost county example in 2026. So the high cost limit is $1,249,125. The entitlement guarantee portion is $312,281. So if you move to a high cost county and still have that same $60,000 in entitlement tied up on the other house, your remaining entitlement math looks like this: $312,281 minus the 60,000 from the other house leaves you with 252,281. The zero down cap is that 252,281 times 4. So $1,009,124. That's over $1 million with zero down. Now, if you wanted to go higher, every dollar you go above that, you got to bring in 25 cents as down payment. So if you're moving into a high cost county, it can equal more buying power for you. If you're moving out of a high cost county, it could equal less buying power for you. This is essential for PCS moves and understanding how to navigate and calculate this. Multi-unit rules. Let's talk about this because there's a lot of confusion around it. The VA does not increase loan limits for duplexes, triplexes, or fourplexes. They still use the 1 unit county limit. This is very different from conventional loans, where the limits increase per unit. And if you were to go online and Google the new FHFA limits for 2026, they will allow you to download a spreadsheet that will show you every county in every state. And there's going to be different columns on the right to show the loan limit for the respective units. Single family unit, 1 unit, duplex, triplex, and fourplex. Now, if you're using a conventional or FHA loan, all of those columns apply for the respective number of units of the home you're buying. In the case of VA does not look at duplex, triplex, or fourplex county limit columns. They only refer to the single family column in every case and every instance. They never use the duplex, triplex, or 4 unit county loan limit amounts. So what's the strategy or the takeaway from this? Well, the VA loan is still an incredible tool for multi-unit home purchases and house hacking. But entitlement math does not adjust upwards on the 2 to 4 units. So keep that in mind. Oftentimes people ask me about that. First-time homebuyer strategies, if you have full entitlement, the limits do not apply as a cap. You can buy as much home as you want as long as you qualify for it with zero down. We've done $4 million loans. We've done $6 million loans with zero down payment. So there's no maximum amount. Don't let anybody tell you there is. Your approval is based on your income, your credit, the residual income, the property type. While the 2026 limits still matter, higher conventional limits equal more homes that fall under that threshold. This can make the VA versus conventional comparisons more favorable. So let's talk about your second VA loan and PCSing strategy. And most veterans don't know this or completely understand it. You can own 2 VA financed homes at one time. In fact, I've got a couple clients that own 3. The math is a little tricky, but you can do it. The new 2026 limits determine whether you need a down payment on the second one or not. So some common scenarios here. PCS move, rent out the first home, buy the second with a VA loan. You have 2 houses. Upgrading homes, but keeping the first one as a rental. That's a strategy a lot of people employ. So buying before selling using the second tier entitlement. So here's an example. You bought a $400,000 home, let's say in 2024, and you use $60,000 of entitlement on that house. In 2026, thanks to the new higher limits, you may now have enough remaining entitlement to buy a second home around $550,000 with zero down payment. So let's compare this. You know, we got VA loans, we've got conventional loans, and we've got jumbo loans. So you have other options, other tools available to you to finance a house. So in 2026, the conventional and jumbo thresholds match the VA loan limits. $832,750 on your baseline and $1,249,125 on the high cost county limits. The VA advantage though, zero down payment required, no mortgage insurance, flexible debt ratios. It's better jumbo pricing for many veterans. When conventional may win if you have 20% down, you're exempt from the VA funding fee, and you want to compare, PMI versus VA funding fee costs. Maybe, those are some scenarios where sometimes conventional can win out. But how you find your 2026 county loan limit is use these tools. So if you go to FHFA county lookup tool, you can do it there. The Fannie Mae loan limit map, VA lender calculators. We have some we can share with you, but double check every county you shop in. Even counties next to each other can differ by hundreds of thousands of dollars, and we've seen it oftentimes. So if you're unsure where you're going to move, you might have a few different equations as far as how much home you can qualify for or how much down payment you may or may not need, depending on the location. I know sometimes if you're PCSing, your base might be straddling or neighboring 2 counties that vary in loan limits. So you got to have a good understanding of where you're heading or at least your options. So here are a few myths and mistakes. Myth number 1, VA loan limits cap how much I can borrow. Not true. If you have full entitlement, sky's the limit. Myth number 2, you can only use your VA loan once. That's wrong. You can reuse the VA loan for life. Mistake number 1, not calculating remaining entitlement before house hunting. Man, you can really paint yourself into a corner with this one. Drop a comment below if you're a first-time buyer, a move-up buyer, or if you're planning to buy again while keeping your current home. VA loans, entitlement calculations, developing home acquisition strategies is what we do all day, every day. So if you want a personalized plan with entitlement math for your situation, my team and I will run the full numbers for free. So click the link below to book your strategy call. No pressure chat. We'll have the 2026 limits. They'll give you more room than ever. I'm sure of it. Let's make sure you use every dollar of buying power that the VA gives you and get you into that house.